are your contribution margin levers? Because the first half of this year it's been about 3.8%. The last year was around 5%. How do you grow from here on the contribution margins?
So I think the philosophy there would be that the ad revenues, which are still much lower for us in relation to how the overall sort of emerging market base is, those will continue to grow. If you look at most other emerging market e-commerce platforms like a Pinduoduo or many others, they have seen much higher growth of ad revenues, and a lot of those ad revenue growth comes when the platform is much larger, the annual transacting user base.
You are already the largest, come on. You'll have to increase that a lot more.
Yeah, but I think the scope that we have from a headroom perspective is also quite large. So I think on that, we will continue to have larger ad revenues, which will be the key driver.
How much is it as a proportion of your overall revenue right now?
So I think ad revenues as a proportion is a smaller proportion as compared to logistics related revenue. But from a margin perspective, obviously ad revenues are
100% margin.
So your ad revenue growth, you said, is lower than what some of the larger e-commerce companies in the world enjoy. What is your ad revenue growth versus theirs?
So not growth, but as percentage of like NMV.
So for peers, what is it?
So if you look at the global benchmarks, this would be somewhere around 5% of GMV levels.
Got it.
Right?
Okay.
So
and yours is lower.
Ours is lower.
What are the steady state contribution margins you're aspiring for?
So I think it should be closer to where the global benchmarks are.
That
I
is?
think
mid-single digits?
Global benchmarks tend to be about 8 to 10% of kind of NMV. So it should be in those lines.